Like audit has inherent limitation, internal controls have their own inherent limitation. Therefore, the assurance that is given is only a reasonable assurance.
The finance statement prepared by the management do not contain material misstatement. That is the whole objective.
In the case of the intangible assets, there is a prerequisite to satisfy. That is, there should be an active market. If you don't have an active market, you can't use the revaluation model.
So according to SLFRS 10, for an investor to have control over the investee, there needs to be 3 requirements. So
this supposed to be very difficult area, you will feel it's not that difficult at all. It's going to be very simple. So let's go through what this standard costing is.
I'm going section by section in the book to make it easier for you, right? I don't kind of compile all the content together into a single lesson. That will not make it easy for you to understand.
If you take a house, if the foundation is not stronger, the house is not going to be strong. If you learn this 1 hour properly, I am telling you, right, you will probably, that is going to be one of the reasons for your exam success. And you will see all the terms that you are learning at the end of these sessions are there in almost all your key chapters in the study text. And this lecture is definitely going to cover about 40% of your syllabus at a glance in 1 hour. That is the power of this lecture, and that is why I wanted to term this as the heart of auditing. Yes.
Auditing is another theoretical, not another theoretical subject like business studies. This is a practical thing, the practical subject. Now, at the audit firm, what we practice are being tested in your CL1 Advanced Audit and Assurance paper. So, when you are learning also, you need to remember this is a practical subject. The practical scenarios could be tested. Accordingly, you have to learn the subject with the practical thinking. That doesn't mean you have to go for audit firm to get through this examination. There are so many people who are at the audit firm but unable to get through this examination, because the decision factor of getting through this examination is not that you are going for audit firm, right? That is why this subject is at the corporate level, where you are not required to have a practical training to do this subject. So therefore, don't come.
The cost what you capitalize during the development stage, can I recover? If I can recover, no problem. If I can't recover, I need to book the impairment loss. So as I mentioned, for these 3 assets, for these 3 items, annual impairment test is a must. And also the normal rule is, if there are indicators available at the reporting date, then it has to be subjected to the impairment testing anyway. So this is actually the normal rule. Special thing is annual impairment testing. Then when you are doing this annual impairment testing, remember it can be done at any time during the reporting period. So let's say your financial year is from 1st January to 31st December. Anyone can decide, I'm doing the annual impairment review each year for these 3 assets on 30th June. That's fine. But it has to be consistent. Same in each and every year. You can't change this year 30th June, next year 30th September, thereafter 30th April. You can't change like that. So whatever the date, it has to be consistent. But a lot of entities, what they do is, they do this annual impairment review at the year end. Okay?
Right. So then doing consolidated financial statements is in adherence with what we call faithful representation. We know in useful financial information we need to have two fundamental qualitative characteristics, right? The first one is relevance and the second one is faithful representation. And faithful representation tells us that we have to look at the economic reality or the economic substance of a transaction and not the legal form, right? We are accountants, right? We don't care how things are legally. Of course, we have to adhere to rules and regulations, but when it comes to accounting, what we need to look at is the economic reality, how things are practically, right? So now looking at both company A and B as one big company called the group is in adherence with faithful representation because we are looking at the economic reality, not the legal form. Even though company A is a separate legal company, company B is another separate legal company, we don't care about that. We are going to put both of them together and create an economic entity, right, that we call the group, and the consolidated financial statements are prepared for that group.
Now in the seasonal demand, it's like varying always. It's changing, okay. During a particular time, higher demand, lower demand, higher demand, likewise. Say this is quarter 1, quarter 2, quarter 3, quarter 4. Good example in Sri Lanka is clothes. During the New Year season, the April season and maybe the December season, people tend to buy more. During the other seasons, it's not that peak. So seasonal demand. Let's say like if it is a rainy season, demand for ice creams may come down. But in the hot season, the sunny season, the demand can go up likewise.
So there are things which are not major transactions. Now, what are the major transactions? Yeah, special resolution is needed. Article should allow it. Buying or selling, right? Or any other transaction, or any transaction that alter the business of the company, right? Which is more than half the value of assets of the company, right? It's that. But take a look at one thing. Now, this one, take a look at this. This doesn't have to be more than half the assets. The MEWA more than half the assets. Acquisition, disposal, transaction. More than half the assets of the whatever, that's major transaction. Methana, take a look at it. A transaction substantially altering the nature of business carried on by the company. Meaning, even if it is less than half the asset. Here, if it is something that substantially change the business of the company, that will be taken as a major transaction. So